Could you say Caroline, Paul, who Caroline is? Just to remind me who Caroline is.
You're on.
Can you hear me, Paul?
You're on mute, Paul.
You're on mute.
I'm on mute.
No.
No, there you go. I don't know how I put myself on mute, but I did. Caroline is the senior manager who works with me on the audit counsellor. She is definitely joining because I got off the phone to her 5 minutes ago when we were just running through the agenda and making sure we knew what the latest position was. There you are. She's waiting to be admitted.
Okay, thank you. Welcome, everybody. Could we then go on to the minutes of the Audit Committee meeting, 30th of July 2020? Minutes of the last meeting. Okay. Can we go on the minutes of the last meeting? Any matters arising?
No.
Any matters arising, anybody?
No, Chair.
Okay, somebody move them as a true and correct record then.
Yeah, I'll move that, Chair.
Okay.
Yeah.
I'll second it.
Thank you. Any urgent items? Jake?
No urgent items.
Item 4, admission of the public. Any items where admission of the public is required to be in the meeting? No
Yes,
urgent item.
item E11 is excluded from the public.
So it's item E11 then. Okay, we'll clarify that then. Thank you. E11. Declaration of interest. Any declaration of interest?
No, Chair.
Okay, thank you. Can we then go on to item 5 now? Identify disclosable pecuniary interest. Is any disclosable pecuniary interest for anybody? No. Item 6, internal audit quarterly report. Simon, are you there, Simon? Simon Straker?
Yes, good morning, Chair. How are you?
Would you like to take the report, Simon? Let's go through it with you.
Right, thank you, Chair. So this is a short summary of the work that we've done to date, and in respect of the revised audit plan that members agreed at the last meeting, if members recall. So perhaps moving on to page 15 for the first item to note, we've done an audit on the authority's VAT arrangements and management and produced an adequate or positive assurance opinion. That's not because of any errors or calculation problems or anything that we found, simply not a substantial opinion because it primarily relies on one person at the moment and any difficulties that may arise if that person wasn't available. So that's why it's adequate rather than a substantial assurance opinion. Moving on to page 16, members might recall that going back as far as the pre-lockdown period, management asked us to look at the use of consultants in managing facilities management processes, which we've now completed. We had to suspend activity during lockdown, unfortunately, so it's taken rather longer than was envisaged at the outset. The main probity issue that we've identified relates to a lack of clear audit trail, and I suppose therefore transparency to account for some of the procurement decisions, especially where changes had arisen after a consultant had been appointed. So in essence, the original specification needed to change for some reason, and the payment mechanism and the management arrangements perhaps weren't as clear and set out in documentation terms than they could have been. I suppose the wider VFM issue, which we were asked to comment on, was: are the current arrangements, or do the current arrangements represent value for money? you'll see in the report that the authority spends has spent a significant amount of money on the use of consultants in this area, particularly 2 to 6 key ones, and I think perhaps now is an appropriate juncture for management to step back and consider whether this is the most appropriate means of delivering and managing these arrangements, or whether perhaps an in-house solution might be better, or some hybrid. So I understand that a more detailed piece of work is ongoing, looking at some of those things, and perhaps Alison may be able to update on that if necessary.
Can I come back to you on this when you finish your report then?
Certainly, Chair. Yes, I'll just a few more brief comments to make, and then I'm happy to answer any questions. I'll try to do so. Moving on to page 17, the authority is required to participate in the National Fraud Initiative, which, as members probably aware from their own authorities, is a nationwide data matching exercise led by the Cabinet Office for HM Government, and the authority is required to submit its payroll and creditors data, which I've now done in the secure way and to the secure website that's required, given the sensitivity of some of the personal data involved, and the Cabinet Office's contractor now effectively puts all this data into a big data matching exercise, and any exception reports identifying any anomalies or discrepancies between the various data sets will be available, I think, scheduled for the end of January next year. Historically, there's a very low incidence of queries to look up, and even lower level of issues arising. I think in the past it's mainly been a handful of secondary employments, for example, that haven't been declared, or there's some doubt over. And then finally, on page 18, just for note really that in conjunction with the risk management strategy group, and a new procedure in terms of arrangements for business risk audits that we do has been agreed and is now working, whereby we now formally receive and approve requests from management to extend implementation dates, if I can say that, for recommendations where appropriate. So for the 4 that are shown on page 18 regarding 2 audits, one on safeguarding and one on the commercial premises risk database, we were happy to do that for the reasons that we've described on that page. So that's a summary of what we've done so far that against the revised plan. We are now trying to step up the work that we do and aim to achieve at least as much as the revised plan as we can to inform our annual opinion. Obviously, in these uncertain times, one can't be completely certain of how things are going to pan out. If and when there are any issues, I'll be happy to discuss those initially with Alison and seek a way forward. Thank you, Chair.
Thank you, Simon. Now, what concerns me on this particular page, on page 16, where value for money is concerned, I think we've got a real problem here. When you get employed consultants, the way we have done, or you have done, as regarding the value for money side of it, £50,000 each, and the total figure of £225,000, and then they come back with another specification. Well, I don't find that acceptable, actually. I'll take advice on that from Alison as well, by the way.
I think I'll let, so we've conducted a property review. I think I'll let Nick.
Hello, Chair. It's Nick Smith. I'm happy to speak to this if you want. So with regard to the audit, we accept the findings. I think from our perspective, we have had some questions about how we resource and deliver our property management unit. So alongside this internal audit, Management Board have commissioned an objective review of the function. We initially asked the LGA to carry this out, but unfortunately because of COVID, they haven't been able to do it. So we have gone via Michael Wood, who you may recognise, delivered the procurement review for us. So it's somebody who understands our organisation and has got the skills and experience in this area. So in terms of the report, it's landed at a very similar time to Michael Wood's more fundamental review of the property unit. I've got a 60-page report here from Michael on my desk, which is in draft form, and I'm meeting with Michael immediately after this meeting, and we'll be reporting this review and the internal audit recommendations to Management Board on the 12th of November. Now, clearly, there's a bit of a balance to be had in terms of the expenditure on consultants because of the wide remit required to run a property function. You need specialist skills, and it often isn't cost effective to employ them. But we are asking the question, to what extent should we employ some specialists, or to what extent should we share these services with other local authorities or other fire and rescue services in the region? So structurally, we do need to look at the organisation of the department, the skill sets that we employ, and if we can deliver, as you mentioned, Chair, deliver this function with greater value for money. So yeah, there's a significant amount of information for us to consider, both from Kirklees and from Michael Wood. We'll be reviewing it at Management Board, and we'll be committing obviously to bring that back to this committee and no doubt the Finance and Resources Committee to determine how we want to run the function moving forwards.
Thank you. Could I have members' questions then? Who's going first? Are you, Karen?
Thank you, Chair. I'd just like to ask what impact the delays will have on some of these audits, because obviously the longer it takes, usually the more costly it will become. So I'm just wondering what impacts the delays in some of the audits will be.
Leave it on mute, I think.
Okay.
Yes, thank you, Chair. Perhaps I could comment on the wider issue of the impact on the revised audit plan. As I mentioned, none of us can be certain about what's going to happen in the future. Clearly, local authorities are being asked to do things which they previously haven't, and some of those tasks at Kirklees have fallen on internal audit, which has necessarily impacted on the audit plan that we're able to deliver both for the council itself and for our external customers, of which the fire authority is one. We will endeavour to minimise the impact where we can, and to keep management informed and have a discussion about how we go forward if and when that situation recurs. I'm afraid that's probably really all I can say at the moment, Chair.
Thank you for that. Can I, and are local councils aware of that as well, that contribute? So the funding is available in place to cover the increasing costs that would probably have to be paid.
Yeah, good point.
Yeah, I'm not sure it's fundamentally a resource, well, a financial issue. It's simply the fact that there are a limited number of auditors at the moment, and if we're asked to address priorities for local authorities, such as administering or helping to administer the business grant system, which is keeping many businesses afloat at the moment, then overall that's probably what we need to do, and we'll need to try and backfill the audit plans that we have as best we can at the moment. I've discussed the revised plan and how we go forward quite thoroughly with Alison Wood a couple of weeks ago, and clearly if we underachieve the revised plan by any significant extent, then we'll have to look at well, effectively a refund, I think, to the fire authority to reflect what happens in the future.
Simon, I welcome that comment. There's a refund available. Thank you, Karen, for that. Can I bring David Hall in now, ladies and gentlemen? David Hall.
Yeah, thank you, Chair. I think first of all, we ought to recognise that internal audit have done everything they can under the circumstances, and I'm sure, like for a lot of people, it's been very hard. So thank them for their work, and we should be satisfied that actually what we've got is fitting at the moment. But I had a question about the facilities management stuff. Obviously, we don't at this meeting need to know the ins and outs about it and everything, because as an audit committee, we just need to be reassured that when something has been found, which we need assurance on, that it's actually been tackled. So in that case, have we got a timescale? I'm sorry, I might have missed it, but have we got a timescale for this to come back to management committee? And is this particularly time sensitive? I mean, when does the decision have to be made as to whether we change any of these arrangements? I mean, because it will affect other businesses as well as our own, won't it?
A good point, David. Many thanks for that point. Alison?
Yes, so any internal audit report that gets limited assurance is actually automatically re-audited again within, I'm not so sure, Sam, is it 1 year that it's actually re-audited? So we could actually bring that forward if we wanted to do that, but this links ties in very closely to the property review. So part of the property review will probably address a number of the issues identified in the audit plan. So they are very much interlinked, Councillor Hall.
Can you come back in, David?
Yeah, just to say thank you. That does give us assurance. I mean, it's important that as an audit committee, and sitting as separate to the management board, of course, that we do send the message back that we're quite concerned about this and we want it tackling quite soon. And I think after what's just been said, we ought to ask for it to come back on a quicker time scale than the year's re-audit, if possible.
John, can you hear me, Chief Exec? Can you hear me, Chief?
Yes, thank you, Chair. Yeah, I note Councillor Hall's comments. I think, as Nick and Alison have both already mentioned, then we're mindful of the situation, and we're confident that the property review will kind of dig a little bit deeper and give us some proposals in terms of the way forward around the way that we do business, certainly with facilities management and property moving forward. So I think, as Councillor Hall says, as soon as we've kind of got that straight in our mind from a management board perspective, then we'll be bringing it back to the committees, what Nick and Alison have mentioned in terms of audit and finance and resource as well.
Thank you, Chief. Any questions? Go out. Any points you'd like to make? No? Okay.
No, thank you, Chair. Sorry, my mic was muted. Thank you.
Are you there? Any questions? Go out.
No, thank you, Chair. No, thank you.
Okay, thank you, everybody. Yeah. Come on there. Alison, item 7, would you present your report, please?
Thank you, Chair. This is the Abridged Performance Management Report. So this gives details of the key performance indicators where the targets have not been achieved. And this is for the first quarter of the year, from the 1st of April to the 30th of June. I'll pass over to Dave and he'll take you through the report.
Thank you, Alison, and thank you, Chair. If you're happy for me to continue, Chair. What I will say in opening, as I said when I presented similar figures to full authority not so long ago, I think what we have to recognise in making direct comparisons with the set of numbers in front of you is that they're representing a period where primarily it was sort of the peak lockdown period of this year, and some of the numbers in there are invariably skewed because of those. And as Alison has alluded to, we are bringing this report to you because of the total activity figure primarily, although there's also one about fatal fires further down where the activity didn't meet target. You will see that the total activity is showing as a red because of the size of the increase in total activity. To remind members of the reason behind that, predominantly there are a couple of factors of note within this report. One being the reduction in the total number of road traffic collisions, which is down some 52%. Clearly, that is because of less traffic on the roads through the COVID lockdown period. But that's down 52% in the context of what are actually, in the grand scheme of things, some relatively small numbers anyway when we look at them as comparators. Primarily, the total activity rise has been driven by the prevalence of false alarms, which are big numbers, measured in over 10,000 numbers. And you may recall, as we explained at full authority, the reason for that is ordinarily we have a policy for mobilisation to automatic fire alarms, where during business hours, during weekday daytimes predominantly, where we expect a premise to be occupied, we wouldn't immediately mobilise to that incident upon receipt of an automatic fire alarm call. A decision was taken very early in the outbreak of the pandemic that because those buildings were likely to be empty and not occupied, we were equally unlikely to get any corroborating information from the property. So we decided that if the automatic fire alarm happened, we would mobilise to them anyway. And you can see that has been measured in quite significant numbers. I think it serves to remind members of the value of our policy in respect of attending automatic fire alarms, because as and when those are removed from the numbers again, we reduce the number of blue light journeys and we reduce the total activity again. So predominantly that is the explanation behind the total activity figure being where it is as well. I would also draw members' attention to the fact that the number of deaths arising from accidental fires in dwellings per 100,000 is showing a red. In essence, that is because we have seen one additional fire death compared to the same period last year, but we have seen 2 instead of 1 last year. So actually very, very marginal numbers, and no particular trends identified within that either. So I'm happy to take questions on the report as presented, Chair.
Karen, can you come in on this point? What you literally raised on this particular page 27, Karen?
Just looking at the figures for actual total activity.
Your mic's off, Karen. You need to bring your mic nearer.
Well, look, I've had a cup drink of coffee, sorry. Where it says total activity and the figures are much lower for the projected 3-year plan to what the previous 3-year average target was. When it was 23,987, and the projected ones for the end of year 2021 are 26,758. There's a difference in that, and then the 2 years last year and then the actual data to date are quite low compared to the previous ones.
Yep, if I may, through you, Chair, where we talk about the 2 columns of actual data to date, that would be representing quarters. This is a report for the first quarter of the year. When we talk about the 3-year average target and the end of year projection, we talk about the whole year figures. So that those figures will grow during the year about the actual data to date as we get to the 3-month, 6-month, 9-month reporting periods. If that answers your question, Councillor Renshaw.
Yeah. Yeah. Thank you, Chair. That it just puts a bit of clarification on those figures. Okay. Thank you.
Go on.
Yeah, thank you, Chair. Just staying on that same page. Obviously, those figures are, it's all understandable due to the pandemic. It's positively affected the, the way people live and travel and activities and so on as well. So obviously some figures are, up to minus 52% in the negative, and others are slightly higher due to this change of lifestyle. My question would be in terms of, year 22-23, looking ahead, whatever the new normal is going to be, how are we going to mitigate these figures when we do the comparison for the year after? Because obviously these are not realistic figures, if you know what I mean, under the circumstances. Do we have any formula to kind of adjust that? Because obviously it's going to show a lot of reds, isn't it?
Absolutely, and that is an extraordinarily good question. And if you had an extraordinarily good answer to that, I would welcome that as well, because that's something we're actually considering at the moment. I think that the point that you make, Councillor Amas, is absolutely spot on. It's equally something that was made at full authority, and it's equally been made in community safety brief, and I know will be made when we meet as community safety committee next week. We have to recognise that these numbers aren't representative. That there's no way, assuming we're back to a degree of some normality next year, that we're going to be able to deliver a further 52% reduction on road traffic collisions. So we are having a think, and I don't have the answer as I sit here now as to exactly how we work with our normal process of using the 3-year rolling average. We do have some significant work going on within the service at the moment around performance management and how we report it. So this particular issue is included within that work as well. And as soon as we've figured out the methodology for doing that, then of course we will present it to members, A, for information, and B, to make sure that you're comfortable with what we're doing and the rationale behind it.
Thank you. And to be honest, I think one of the other simplistic, I mean, obviously it would be good to have sort of formula where all these mitigating factors are taken into account. If not, I think it would be advisable to perhaps go back a year and include this extraordinary year, perhaps to make sure that we are, you know, sort of comparing apples with apples.
Absolutely.
Otherwise, a lot of issues there, you know, not only on the red side, but also on the green side as well. If we, you know, we don't want to have the unrealistic figures, you know, sort of undue stress on the authority, on the service. But at the same token, if the figures the year after are representing the situation properly, then we don't want to give credit as well, which is perhaps not due. Do you understand where I'm coming from?
I absolutely understand. And whilst that's arguably the most blunt and simple tool, it may actually be a very reasonable way of doing this, almost to put this year to one side and then build the figures around it. But that is something that's part of our deliberations at the moment.
Thank you, sir.
Thank you.
Okay, thank you for that. Rick, any points you'd like to make on this? As a regular road user?
Councillor Howell.
Councillor Downs?
No, fine. Well, other than to say that obviously it's been an exceptional year with COVID, so you can't really take anything from it. You know, there's been so many different ways that we've had to deal with things. So it is a year in isolation, and any statistics from it, I think, will just be an outlier and probably not really worthy of planning for the future, unless, of course, we remain in this pandemic for any substantial length of time. Although the way we're dealing with it is changing each time, you know, each wave we're getting, we're responding in a different way. So I think we just have to go with it and do the best we can around what's happening.
Okay, thank you, Rick, for that comment. Councillor Hall, any comments?
Yeah, thank you, Chair. Yeah, as has been said, I think most of the figures on here seem to be intuitive, given the unprecedented year we've had so far. One thing that struck me, and I hope officers will tell me if I'm reading this wrong, is and it's never occurred to me before, but the prevalence of false alarms as a proportion of our total activity is an awfully big number, and I presume this is the case countrywide with fire and rescue authorities. Is there anything that can be done by the Fire and Rescue Authority to try and bring down the prevalence of false alarms, or is it something we accept as it's always going to happen and it's nothing much we can influence?
David?
Yeah, if I may then, Chair, I think firstly to give some, and I put this in inverted commas, some reassurance that the proportion as a representative of the whole number of incidents is broadly consistent with what it has been for previous years, and is broadly consistent with the national pattern as well. Do we accept that? No, we don't. As I alluded to, and I think this may have predated your time on the authority, Councillor Hall, we took some decisions which were relatively contentious at the time, which the authority, may I say, quite bravely backed, because we were one of the first in the country to do it, that we wouldn't necessarily respond to each and every automatic fire alarm that we received, which used to be the way, and it's still the way in some fire and rescue authorities now. We feel that we have a system in place where our prolific offenders, if you like, become subject to a cost recovery charge after a number of almost 3 strikes and you're out. That's not imposed as a punitive process. It supports our education package, because as well as doing that, what we're trying to work with people is to deal with the fact that usually these false alarms are due to either poor maintenance, poor sighting of detectors, etc. And we're trying to work these figures out, but that they are significant. They're a significant part of our activity, and there are a range of measures that can be taken. You know, that there is a school of thought that you just don't go to any full automatic fire alarm whatsoever, unless you either get a second call or a human being, as it were, confirming it. We sit in a halfway house where we recognise there are some high risk premises and some high risk times of day, such as care homes, etc., where we will always go. But that's where the impact is available to be made. In theory, make sure that those premises with false alarms are well maintained. Once you've got them to that sort of state of nirvana where they're as well maintained as they possibly can be, you then take a view on how you respond to them should that automatic fire alarm sound. Continual work in progress is probably the best summation of that, if that's okay.
Could I ask then, Chief, could I ask a question as regarding where the cost recovery figures are concerned? Would you let us have the detail of any charges we've actually made them? We used to have them last year. I know we haven't had any this year, if you don't mind.
So certainly that I can't remember exactly where we are in the reporting cycle, Chair, but that they are regularly reported to members, and we'll make sure that that's done at the next appropriate opportunity.
Councillor Pervez, do you have any questions to put forward on this particular issue?
No.
You okay, love? Okay. Could I move on to item 8 then? Service improvement assurance policy, 6-monthly update. Adrian Bairstow. Who is Adrian Bairstow now? Could you introduce yourself, Adrian?
Chair, it's Nick Smith. I'll be presenting the report. Adrian Bairstow's authored it on my behalf. So,
okay, Nick.
Contact officer, I'll present it. So this is a short report that represents a significant amount of work that's been carried out within the service improvement and assurance team. So that team specifically set up within our organisation to do what it says on the tin, to look for opportunities to improve the service and assure the service, and it primarily delivers the service assurance policy and framework, and oversees the Her Majesty's Inspectorate of Fire and Rescue Services. This is a 6-month update of the work that's been ongoing. So in 2.1, it just gives an outline of the service assurance process. So for members that aren't aware, as an authority, we have got a service assurance framework. That framework sets out a standard way of operating in every department and work team across the organisation to ensure that each team is meeting their sort of like duties, delivering as expected, and complying with our own policies. So it's a significant framework, and it's something that over the last 2 years we've been trying to move teams across to, so we've got a consistent way of working. It's pleasing to say that organisationally departments and teams are accepting this and have been really supportive in the adoption of it. And the information there just gives an indication that in the first part of the year, 100% of the departments engaged with it and returning their self-assessment toolkits, which is a really good result and recognition on the work on behalf of the team. I think, as you recognise, COVID impacted the organisation. We're impacting departments, but obviously as well impacting the ability for the service improvement and assurance team to deliver this work. So a decision has been made to postpone progress on that until the beginning of next year. Part of that decision was, as we move on to 2.2, was to free up the resource in the team to focus on COVID recovery. So back in April now, towards the end of April, the team developed the recovery strategy and organised itself to oversee the services recovery process from COVID. Although we understood, and from the very start we understood that this recovery would only last a certain period of time until we hit phase 2 of the pandemic, we had some real energy within the recovery group to try and help us understand the impact from the first phase of the pandemic, identify and collate any learning, and then understand where there was opportunities to change how we operate and promote sort of like the new way of working, the new normality, as we've referred to it. So yesterday I closed down the recovery group, and we've handed the baton back to our crisis management team as we enter phase 2. But it's fair to say that the team and the group did achieve all those objectives that were set out. So organisationally, we've done a significant amount of work to understand the impact that the phase 1 of COVID has had on us. The learning from phase 1's been fed back into the crisis management team, and then the service planning day we held a couple of weeks ago has helped identify new ways of working to embed those on the back of the pandemic. So all in all, although we've been responding and been sort of like critically affected by the pandemic, we're still looking for opportunities to improve and assure how we've been dealing with it. Alongside that, 2.3 covers the work that HMIC FRS have undertaken, and they're still undertaking across the service. So they've been commissioned by the Home Office to have a look at how the fire and rescue services have responded to the phase 1 of the COVID pandemic. We've had our inspection. It's a virtual inspection, so a number of teams interviews with officers. There's obviously been a significant amount of data collected and documents returned, as well as a staff survey. The Chief and Deputy have received the hot debrief from that last Friday, and we expect to receive a report or a letter from HMIC FRS at the end of the year detailing their findings. It isn't going to be a comprehensive report and a graded judgment that we received during our first formal inspection. This is more of a thematic inspection focused on COVID response, so we'll welcome their inspection findings at the end of the year, and obviously we'll be reporting those to the authority at the earliest opportunity. So that's the report in essence. As I say, it's a short report, but don't underestimate the amount of work that's been going on within the organisation and this team to deliver against that. I'll take any questions.
Thank you. Excellent report. That Chief Exec, did you want to come in on this one?
Through you, Chair. No, not really. I think just I guess a brief summary of the feedback from the inspectorate last Friday. I think there was no real negative comments in terms of the service's response to the community in the COVID pandemic. I think, as Nick's just said, then we'll get a draft version of the letter from Sir Tom Windsor, who's the Chief Inspector for HMIC FRS, and then that will be published as part of a State of Fire report and laid before Parliament early in the new year, as is a legal requirement for the inspectorate. So nothing further to add, Chair. Thank you.
Okay, thank you. Nick, while it's still on, can you actually provide us with the PESTEL documentation for the members of the Audit Committee when you get a chance to draw it up and that, so we can have a read of it and that?
Yeah,
okay?
So, yeah, what we'll do, we'll look at providing you almost a summary of the impact and learning that's been identified. I think the PESTEL and how that's fed into the impact is a real big piece of work. We're currently just verifying that across departments. So yeah, as soon as we've got that into a consolidated document, we'll feed that back to you. So, yeah.
Okay. Any further comments, ladies and gentlemen, on this particular item? Thank you for your report, Nick. It's excellent, and David. And questions raised by Karen and David, and thank you.
Okay.
Statement of accounts.
No, Chair, I'm just going to have to give my apologies and leave the meeting now. Okay, thank you.
Thank you, Nick. Okay, thank you. Statement of accounts, item 9, ladies and gentlemen. Alison?
Yeah, so I'll take that one. So attached to this report is the full statement of accounts. They haven't been fully audited yet, and the reason being is there's still some outstanding issues regarding McLeod and Sargent and the Goodwin Employment Tribunal cases. What I am asking today is that members actually approve the accounts and then give authority to the chair to actually sign these off once Deloitte have actually finished their audit. So as I've just said, there is some outstanding issues regarding McLeod and Sargent and Goodwin. And also, before Deloitte can actually sign the accounts off, they actually need reassurance from West Yorkshire Pension Fund. So Ms. Ours are actually auditing West Yorkshire Pension Fund. They need some reassurance that our figures in our accounts have got no materiality issues. I'm sure Paul will actually go into more detail with that when he discusses this report. So So I'll just briefly explain what's included in the statement of accounts. As you say, it's quite a comprehensive document. So there's 4 key statements. The first one is the comprehensive income and expenditure statement. This actually mirrors the information that we actually provide to our directors, and this includes all the accounting costs. It's not the actual cost of the taxpayer. So this will include adjustments for depreciation, revaluations, and also pensions. Secondly, the balance sheet. So this gives, as at the 31st of March, financial position of the authority. It's actually broken down into the assets and the liabilities. Due to pensions, for which is a liability of 1.4 billion on the balance sheet, the actual net worth of the authority is a negative figure. If you actually take out the pensions liability, we do have a net worth of 77.6 million. So usable reserves, so these are the reserves that the authority can actually use to fund future investment or reduce council tax. The authority's usable reserves at 31st of March was 34 million. So the movement in reserve statement is exactly what it says. So that actually tracks the movement in reserves between usable balances and unusable reserves. So the balance on unusable reserves has decreased by 88 million, and also as usable reserves have decreased by 1.6 million. And members are aware that we've been actively using our usable reserves to actually fund major rebuilds and also refurbishments. So cash flow statement, that actually tracks the changes in cash and cash equivalents, and there's been a net increase in the amount of cash and cash equivalents of 4.6 million, with a closing balance of 11 million at the end of the financial year. So that's quite a quick run through. Paul will go through the outcome of the audit so far and give you a bit more detail on the issues I've just raised. So happy to take any questions.
Okay, ladies and gentlemen, thank you, Alison. It's a large piece of work, is this actually, where the budget's concerned and what have you. So the balanced budget has got to go through as well as the same time after this statement of accounts. Would anybody like to raise any points in the actual documentation on this particular issue as regarding item 9? Any comments at all? Who would like to go first? Anybody?
No.
No comments? Oh, okay. Can we then move on to item 10?
So that's Paul from Delight that will take
it's Paul,
the next report, yeah.
That's it. Paul's report. So let me just go through it and I can know where I am.
Yeah.
Okay, Paul, could you bring your report to the attention of the Audit Committee, please?
I certainly can, Chair. So what you have here is our report to those charged with governance, which is a report that we're required to make to you that summarises the key messages arising from our audit, and also serves to communicate the status of the audit and where we think the likely outcome is going to be. I will assume that the report has been read, and so we will just pick out the key messages from the document, but please do feel free to raise your hands, interrupt, ask a question if you want me to dwell on any particular point. Caroline and I will do a double act on this. I'll take you through some of the beginning and end, and Caroline will take you through some of the key messages in the middle. So starting on page 3, the first point in there on the status of the audit. As Alison alluded to, the audit is not quite concluded yet. There is a list of points that are outstanding there, and I'd just like to take a moment to update the committee on the status of those points. So, receipt and evaluation of information from the West Yorkshire Fund auditors, as Alison raised a moment ago, because you've got asset values in your balance sheet that are within the pension fund, I need to know that the pension fund auditor doesn't conclude that either those assets are materially wrong, in which case I need to decide whether or not there's a material impact for yourselves, or whether there is a material uncertainty over the valuation of the assets. And again, how much impact would that have on your financial statements? We have written out to the auditor of the pension fund, and we are awaiting their reply back. As soon as they come back, obviously we can get to work with understanding the results of their audit. The receipt of our final specialist report in respect of pensions. This is because pensions, particularly pension liability, is such a judgmental area. We do use our in-house actuaries to review the work of your actuaries to make sure that the methodology and the evaluation of the liability is in line with expectations, in line with industry norms. We received the final updated report from Aon this morning. We had the GAD one a little while ago. So those reports will now make their way across to our actuaries, who will then be able to review them and determine whether they think the methodology used and the assumptions adopted are all reasonable. And that will include the next point, which is the evaluation of the impact of McLeod and Goodwin on the pension scheme. Your reports now include the impact of those two cases on the pension fund liability. I don't propose to go into detail of them now, but I'm sure we can debate them if people aren't familiar with them. As I said, we do have the updated pension reports now. We are in the process of reviewing them. Our query on the creditors testing has now been resolved, so that matter is off the outstanding list. The finalisation of the creditors note and the testing updated note, that is also resolved, so that is off the outstanding list. The review of the fair value disclosure provided by Arlene Close, we have reviewed those now and tested them. And whilst there are a couple of review points raised for addressing, the work is concluded substantively. The title of the narrative report, it is the most efficient to do that once rather than doing it on multiple versions of the accounts, just in case the numbers change. And so we will look at that once we have the final updated set of financial statements, just to make sure that it is consistent at the front and the back of the financial statements, and there is no discrepancy between what you say in the numbers and what you say in the words. The finalisation of the notes testing, we have a couple of queries here and there, and there are some corrections that are outstanding, not least of which is the creditors testing, which we need to see in the final set of financial statements. But I think we also have some queries outstanding in your financial instruments notes 18 and 19. But these are minor in the grand scheme of things and quite capable of resolution in short order. As I said, we need to receive the full and final updated set of financial statements. We need to conclude our internal quality review processes. We will need the signed letter of management representations. So for those of you who are not familiar with that phrase, this is a letter of matters we ask management to confirm to us, because no amount of audit work could ever give full assurance that the issue was addressed. So amongst other things in there are things like, we have provided you with all the information you need. If management withheld something, we'd never know that it was there. So we get management to represent to us that they have given us what we need, and they are happy that the assumptions are right, and they are happy that the accounts are accurate and true and fair. And then we need to do our review events up to the point of signing. That point always stays on there until we actually do sign the accounts, because even if something came in on the last day, at the last minute, so if you got landed with a massive legal claim just before we sign, we'd need to consider whether it was relevant to the audit opinion or if we could just park it. So that review events always stays on there right from the point that I actually put pen to paper. So as hopefully you can see, we've managed to strike through a good chunk of the items on this list. Some of them stay on there for very good reasons, because it makes sense to do it once at the end, and some of them are out of our hands. We're waiting for the pension scheme auditor to report back to us. Where we stand at the minute, I still believe that we will achieve the 30th of November deadline to sign the accounts off, which is the revised deadline. If anything derails that, I will of course flag that up to the chair and to Alison as soon as we are alerted to the risk. But at the minute, I don't see any risk to that.
Okay, Paul, many thanks. Alison, do you want to come in on this before I bring the members in? Do you want to respond?
If I may, Chair, we need to. I need to take you through a bit more of the report. That was just a summary on the first page, unless members want to specifically ask questions on the status of the audit before we get into the findings. Okay, fine, thank you. Any questions, members? No, not so far. Carry on, Paul. Thank you very much. So, in terms of conclusions, whilst we aren't finished, and I've just outlined the things that need to be done, I don't think, where we stand at the minute, my expectation is that we will be able to sign an unqualified opinion and an unmodified opinion, and that will be in respect of both the financial statements and the delivery of value for money. And we say that a little bit more detail later on. The one thing that will be in there that will look a little bit different is there will be a paragraph around a material uncertainty in our audit opinion, and this is connected to the valuation of assets at the year end. So because of COVID and because you have to revalue your assets at 31st March, we were right in the height of the grip of the pandemic, The Royal Institute of Chartered Surveyors issued guidance that said, as at 31st March 2020, there was increased uncertainty in the market, and therefore it was not possible to place the same level of reliance on the valuations as you would ordinarily do so. It wasn't to say the valuations were wrong, just that nobody really knows that they are as right as you would normally know. So that does introduce a material uncertainty that the financial statements could be wrong, but they may also be right. So what we do is we get management to include a disclosure that highlights to the user accounts that there is this uncertainty that exists. We, in our audit opinion, include a paragraph that draws attention to that says, management have said there is this uncertainty, please pay attention to that and read it. When I did my training, they referred to this as the auditor's highlighter pen. And it's basically saying, if you really want to understand these accounts, you need to know this, so please pay attention to it. It definitely is not a modification, it is not a qualification. The opinion is still unmodified, so it is still clean. We're still seeing the accounts represent a true and fair view in all material respects. We're just saying there is uncertainty around the valuation of the assets. It is conceivable that we could end up in the same position over the valuation of the assets in the pension fund, which goes back to needing the report from the pension scheme auditor to know exactly what they conclude in respect of the pension assets in there and whether there is any uncertainty in there, but we don't yet know that. So taking you on still further, I've pretty much addressed page 4, which tells you that we are well progressed. We don't have any matters to report. It's worth highlighting we do not have any formal queries or objections from members of the public in respect of the financial statements. You may be aware that if a member of the public does object to the accounts, then there is a framework within which we have to reply and respond, and we may have to issue reports in the public interest or apply to the courts for things being contrary to law. There have been no such matters raised with us as auditors within the relevant window, and the window is now closed, so nothing can be raised as an objection in respect of this current year financial statements.
Could I just ask on the public interest report, Paul, has there been anything moved forward on that one then?
Pardon, Councillor, sorry, I was still talking, I missed the start of your question.
Public interest report then, you've not received anything as regarding anybody's interest in that one then?
Absolutely not. Nobody has raised an objection which would give rise requesting a public interest report, and I have not identified any matters through my audit which would give me cause to consider the need to raise a report in the public interest.
Okay, thank you.
Pool of government accounts, the guidance still has not been published. I don't know when they're going to get on and publish the guidance. They have confirmed that the thresholds will be unchanged from last year, which if they follow through, that will mean that you are out of scope and therefore there will be no work to do. We will just have to confirm back to the National Audit Office that you are out of scope. But until they formally publish the guidance, we can't say definitively that is the case, but that is my confident expectation that you will be out of scope. If I can move you on to page 7 of our document, which is page 159 of the pack or page 161 of the PDF, depending on which format you are using. And this is the one with the little chevron timeline in there. The reason I'd like to draw your attention to this is on materiality. In our planning report, we said that materiality would be 1.68 million, but we would update that based on final numbers. When we received the financial statements and we reviewed and reapplied our estimate of the materiality, we set it at £2.26 million. And the reason for the change is that there were some significant pension numbers flowing through the CIES, which changes the benchmark level of expenditure, which means that the level of materiality was then adjusted. So that's just to bring you to your attention. So for those of you who can't recall, materiality is the threshold that I set when I say above this value, I believe that the accounts need to be changed, because that would be potentially would change the reader's understanding of the accounts. Below that threshold, I can tolerate it because I don't think it would change the reader's understanding. And that also has a knock-on implication for the clearly trivial threshold, which is the £113,000 that I mentioned on there. And that is the level below which we don't report issues to you individually, because they are judged to be trivial in the context of the financial statement. I'm not saying they are trivial full stop, but they are trivial to the user of the financial statements. We do at your request report the aggregate value errors below that level. And when we get to the final conclusions and finally issue an updated version of this report, along with our opinion, we will include the aggregate value of those errors. But at the moment, they don't give me any cause for concern.
Just clarify the 2 million for me again, David, please, for the benefit of the members.
So what specific point would you like clarifying, please, Councillor?
Say that again.
What specific point would you like me to clarify?
Where it's gone from 1 million to 2 million there, that point there.
Also, so it went from 1.68 million to 2.6 million. And the reason for that is that the level of expenditure recorded in the CIES was higher than we expected it to be, principally due to additional costs flowing through as a result of the pensions adjustments.
So it's the additional cost of the pension adjustments. Okay, I've got it. Thank you.
Okay.
Yeah, thank you.
May progress then, Councillor. We then have a couple of slides on how we've responded to the COVID-19 pandemic through our audit. I don't propose to talk to them in any detail unless members want me to. They're just given for your information so that you know that we have been cognizant of the challenges and we have responded to them. Which then takes us to page 11, which is the significant risks dashboard. And I will hand over to Caroline to take you through the significant risk, but just to remind members, these are the items that I identified in my plan, which I believe either because the ordinance standards require me to, or because they are sufficiently judgmental and sufficiently big and ugly and difficult, that they are at significant risk of resulting in a materially incorrect number in the financial statements. And so we do our work in respect of these areas to a higher level of assurance to make sure that we are doing work commensurate with the level of risk faced. But I will not steal Caroline's thunder, and I will let her take you through the next handful of slides where we talk about the risks in detail. Caroline?
Great, thanks, Paul. So as Paul said, on page 11, that sets out the items that we reported to you as part of our planning report in January of this year, which are our significant risks. So on page 12, this sets out the work that we've done on in respect to the significant risk on the valuation of property assets. And we identify this as a significant risk because asset valuations by their nature are highly judgmental, and small movements in the inputs made by the valuer can lead to a large change in the valuation that's reported in your accounts. So we've completed our testing in this, and we've mainly looked at the valuation report and also how that's posted through to your accounts. And we don't have anything to report back to the committee in respect of this risk. Everything looks appropriately presented within the accounts. Page 13 of our report sets out the impact of COVID-19 on our work in respect of property valuations. But I won't talk you through this slide because that's mainly just summarising what Paul talked through earlier around the material valuation uncertainty. I will just update you on the Deloitte view where it says that we made recommendations to management to include some additional disclosures in the financial statements. Management have made those changes that we recommended, and so we're happy that that's all properly presented within the financial statements at the moment. Page 14 sets out our work on the significant risk in respect of completeness of expenditure. So under auditing standards, we're required to have a significant risk in respect of revenue, but in line with previous years, we've actually identified that in your expenditure balance just because the nature of your revenue stream doesn't really allow there to be any manipulation. So we've now completed our testing, as Paul highlighted from the introduction, and we've identified 2 errors as a result of this. So the first one is an extrapolated error of £294,000, which is owing to 2 errors within our accruals testing, which totaled 21,000. And because of our auditing methodology, what we're required to do is from our sample, work out what the error rate that we found in our sample and apply that to the total population. And so that comes back to £294,000. And the reason for the error is purely because of timing. So management had to make a best estimate when they were closing the accounts. And because we have the luxury of time and being able to look at information received later on, we've been able to obtain an invoice which suggests that the estimate made at the year end wasn't 100% correct, but equally not materially incorrect. And so it is a best estimate. And so we're happy with that process. The second error that we found was a misclassification within the disclosure note, so the creditor's note. And that is between the trade payables line and the other payables line. So included within your other payables line that in the stats that you've got is 1.034 million, which should be disclosed within your trade payables line. Now, we've discussed this with management and also have completed our testing on this, and we understand that the amendment is going to be made into the next set of the financial statements. That's not included in the report at the moment, but that just sort of gives you an update on our testing. We've also raised a control recommendation just as a result of the 2 errors that we've identified, just around how management identified creditors and also the classification, and just have made some recommendations around ensuring that the process is robust at year end and that's the thorough review, and also they just look at reassess how they work out the classification between trade payables and other payables. And the recommendation has been accepted, and understand that there is revised working papers being worked up for next year to ensure that that's appropriately classified for next year. Then if I skip you on to the next significant risk, so the final one is management override of controls. So this is a presumed significant risk that we have to have under auditing standards. We have nothing to suggest that Alison and her team are actively overriding any of the controls, but we are just required to have this as a presumed risk. So we've completed our testing in this area, and it's mainly focusing on your journals and looking, do they have business rationale, and also looking at the estimates included within your accounts. And we've got nothing to bring to the committee's attention around our work in this area. And page 16 of the report just sets out our work on value for money. So members may remember that in our initial planning procedures, we didn't highlight anything of any significant risk. We've updated our risk assessment through our year-end audit work, and also have looked at various other documents, including the HMIC FRS report, and we have nothing to suggest that there are any significant risks. And so we've updated our risk assessment and envisage issuing an unqualified value for money conclusion. So there's nothing to bring to your attention at this moment. And then pages 17 and 18 just set out some of the control insights that we have identified through our audit work. I don't propose talking through all of them that are highlighted there. The only 2 that I really wanted to pull out were the first one on the expenditure control, just because that links to, which is on page 17, it's the bottom one of the table, just for members. Just purely wanted to pull this one out just because it links to our significant risk. But I think I've already sort of touched on it earlier, so I don't plan going through it in any more detail. And then the other one was just around the related parties forms. So at the moment, the related parties forms require members to disclose if they've had any transactions with the authority, rather than members disclosing if they have any interest and then the authority looking to see if there was any transactions. It should be the other way around. And from discussing with management, they're going to make amendments to the forms for next year. So that will be the revised forms coming out next year. And they've also done some work to look to see, actually, if the forms were laid out the other way, would there have been a change to the disclosure made? And there wouldn't have been any changes to the disclosure that had been made, but they do accept the recommendation. Those were the only ones that I was going to pull out, unless, Paul, you wanted to pull anything else out, or otherwise I'll hand back to you.
Okay.
No, there were no others that I wanted to pull out. Thank you, Caroline. I guess the related party one, it might seem a bit petty to raise it, given that there would have been no difference, but I get very nervous about related party transactions when it comes to local authorities, because if you're not whiter than white on related parties, then it fails the front of the local press test. You know, it doesn't even have to be that bad, but if there is any whiff of related party transactions being out of control, it doesn't end well for anybody. Councillor Renshaw, I believe you have a question.
Thank you. I'd just like to ask, I was going to ask actually what you've just explained, but I still can't understand why, if it doesn't make any difference to the outcomes, why bother changing? If you've got something that you're used to using and it's in columns, and those columns don't make any difference regardless of the order or sequence that they put in, it's just creating more work in a department that's already doing very, very sort of understandable workloads. But I would like to ask for some clarification on income classification. we've put the categorisation of some general ledger codes is
Yes.
inconsistent.
Yes.
Could you just elaborate a bit on that for me?
Certainly. So note 9 to the accounts, if you care to look at it, is the one that splits out your income and expenditure by type. So it's the one that's got where did you, as opposed to what service does it sit within, it's what is it? Well, what is its origination? And the way the ledger is laid out, there was just a misanalysis between headings within the income. So we're not saying any income was underreported, and we're not saying any income was missing, but just the analysis of that note was incorrect.
How was the analysis incorrect if they were in columns which the fire authority were quite familiar with and could understand and work out the correct accounts?
So it's to do with what was the underlying nature of the revenue. So I believe this related to, Caroline, help me out, it was
It was two very specific streams. So it was the ESMCP grant income and also the apprenticeship levy. So they were just in the original version of the accounts were disclosed as customer and client receipts, but they should have been included as grant income under the code. So it was just where they'd sat within the ledger breakdown meant that they'd gone into the wrong heading. So it was just to move the two between the two headings.
We can pick that up, Karen. We'll pick that up for you.
I was going to say, I'm sure that's something that is just time consuming to the authority that I think do a fantastic job.
Yes, yes. David, do you wish to ask a question? Councillor Hall.
Yes, thank you, Chair. Yeah, I will come in there. I mean, first of all, we ought to pass our thanks to the officers that have prepared the accounts and the auditors for auditing them, because they've done a great job as always. As regards the auditor's report here, you know, I'm very reassured that everything that they've picked up and a lot of these minor issues, that these things have been addressed by our officers to the contentment of the auditors is what I'm hearing. There's nothing material in there that we should be worried about. So I'm very happy with the report as it stands. Thank you, Chair.
Thank you, Councillor Hall. Okay, any further questions, Paul? No further questions. Carry on with your report, Paul. Finish your report.
Thank you very much, Chair. I am almost finished, I promise you. I will skip you on from where we left off, which is the control findings. We'll go through our audit report, just tells you what is in our audit report and what isn't, what you can expect. And again, we make a note of the emphasis of matter just because it is unusual and we want to make sure that everybody really does understand it. We go through our responsibilities in respect of the annual report and the annual governance statement, on which we don't have anything to report. We have a slide on how we are responding to the challenges around audit quality, which is just giving you your information. But the next slide that I actually want to draw your attention to is on page 24 of our report, 176 of the pack or 178 of the PDF, which is the unadjusted misstatements. So these are the errors that we have identified in the financial statements that have not been corrected by management. And the reason that we bring these to your attention is because, as you heard when asked for that paper, you're being asked to recommend these accounts for adoption. And so it's important that you know what we think is wrong with them. So at this point in time, there are 3 uncorrected errors, which relate to one is a prior year error in respect of creditors, which just rolls into the current year because we thought that you had under accrued last year. So that means your expenditure this year is understated. There's the LGPS, there was an error in the Aon report for your LGPS membership. I believe that's now been corrected in the latest report. And I also believe that management said they're going to post that out. So I expect that LGPS share to disappear and move down to the corrected misstatements. And the final one is the accruals point that Caroline mentioned in her summary of the findings. And again, just to reiterate, these are not material errors. They don't prevent me from issuing a clean audit opinion. However, I am required under the auditing standards to ask you to make adjustment for them. And if you're not going to document why you are satisfied you don't need to. And in that respect, I would probably invite you to take advice from your Section 151 officer, who will no doubt tell you what a big job it would be to flush these adjustments all the way through the financial statements when they aren't really that big. But I am required to invite you to change them, and when I conclude my report, I would ask you to comment on that specifically. On the corrected misstatements on page 25, these are included just so you know what was wrong in the first set, so that can help you track from the original set to the final set if you were so inclined, but it also gives you an idea of quite what a good job your finance team are doing. The fact that there aren't any material numbers on here suggests that the original stats were not materially deficient. We found a few things here and there, but nothing to really make you sit up and go, oh my goodness, this is something we really need to pay attention to. And similarly, I think if you contrast that with the corrected misstatements last year, this is a big step forward. So we then confirm our fraud responsibilities, what we are and aren't responsible for. That's to avoid the auditor understanding gap. Our independence and fees, just to reconfirm that we are independent. I am still independent. I am still able to give you an independent auditor's report. In respect to the fees, there have been some additional costs incurred in respect to the collection fund, note 9, and some of the work around creditors and pensions. And we will be looking to have a discussion with Alison about a fee to reflect that additional work once we've concluded the audit. And that's probably all I was going to say, other than a general point that, you know, for a second, if everyone can just get their little violin out and think about the audits. We've never tried to do audits remotely by email ever. Certainly not for an entity of your size. We do them for tiny little companies that don't do anything, that don't have any transactions, not for a big, fully functioning public authority. This was novel. And actually, to have got where we've got, to only really be waiting for the pension fund audit to finish their work, has been a testament to the way in which the relationship between our team and the finance team has developed over the year. I know the senior finance manager and Caroline have had very regular and open, structured communication to make sure that the audit progressed in a way that we all understood. And also, I would also highlight that unfortunately, the senior finance manager has been taken ill in the dying throes of the audit, and the rest of the team have stepped up to fill that vacancy. So there's been no loss of momentum of work just because one person stepped down. So I would just like to highlight it has not been an easy audit, and we are cognizant of the fact that the finance team have contributed really positively and engaged positively with the audit process.
Thank you.
And on that note, I will hand over to you and just reiterate that I would like you to comment on the correcting or not correcting the uncorrected misstatements, please.
Okay, we can do that, Paul. Can I just go back to page 18 for the moment? Page 18, assets under construction, Paul. Why have you identified that one as a concern, where the building controller is actually responsible there? Right. What have you identified here then?
So, 1 second, somebody's trying to ring me, so let me put my phone on silent before it starts ringing again. There we go. So the reason for this is, at the year end, at the 31st of March, you always have to take a view as to whether your fixed assets are worth what they say they are in the financial statements. And with assets under construction, it's a bit of a difficult one because you don't revalue, because ordinarily you can point to the fact that the valuer looks at them and says, yep, that's fine, this is what it's worth, and you can adjust the value accordingly. Assets under construction, you don't revalue until you've actually finished the work. So there is always a risk that if there is build inefficiency, that you build up an impairment in your assets under construction, that when you bring it into service, you suddenly go, oh, we've spent £1 million on this, but now the valuer is only telling me it's worth 750,000 because it just cost more to build it than we thought it was going to, but the resulting asset isn't worth any more than it would ever have been. So we reckon it is good practice that where you've got significant balances of assets under construction at the year end, that you undertake a review just to make sure that you're satisfied that the project is on track, that it is proceeding as expected, that there haven't been any unforeseen costs that may not contribute to the final asset value, and therefore you don't have any latent impairments that under the auditing standards you should be recognising as soon as you know about them. So that's the reason for it, Chair. It's not because we believe the assets aren't correctly stated or that we know that there are errors in there or latent impairments. It is more that the process around it should be a little bit tighter than it currently is.
Okay, I've got that minuted. Thank you. Now, where Alison's concerned, Alison, a final comment on this. Would you like to comment at all?
Yes, so I'll make a comment on the assets under construction. So that, I think this year is in relation to the Wakefield rebuild. So
yes.
ordinarily, we don't usually have big assets under construction. So what we have agreed to do is do a desktop review rather than having a full valuation when the asset is under construction. Because what we do when the asset is operational, we do actually get a proper formal valuation. So rather than spending it twice, we will actually ask our valuer to do a desktop review, as Paul suggested. But I'd just like to echo really what Paul said, that certainly the working relationship between Deloitte and the finance team certainly worked really well this year, and I'd just like to thank my team for doing a good job, and certainly since senior finance managers been taken ill, that the team have really stepped up and ready to produce a final set of accounts ready for Deloitte's final audit.
Yes, could I just say then on that particular point then, if there's any further comments from the members, could you now raise them please before I go into the final situation here? Any further comments on Paul's report?
No, I'd just like to say thank you to both Alison's team and Paul's team, obviously, for delivering and progressing with relationships throughout.
Yes, it is working well. Good. Yes.
That made you smile, you see, Paul.
Okay. Could I just say then, would you say then that members, we've got a balanced budget here then that can move forward on that up till November and that if need be? Would you say we've got a balanced budget, ladies and gentlemen? Karen?
Yeah, yeah, I'll propose that.
Go on. Councillor Dwyer?
Yes, Chair.
Okay. Pervez, Councillor Pervez? She's still with us, is she okay? She's had a bit of sadness this morning as the lady, by the way. So, David, Councillor David Hall, would you say it's a balanced budget, David?
I'm happy to approve recommendations, Chair.
Move the recommendations. Okay, thank you. Thank you, everybody. So we've got a balanced budget, Alison.
Yeah,
We'll go forward from that. Then. Thank you for all the work you've done on the staff and everything else. It's been an excellent meeting, this actually.
Chair, Chair, just one point. I do need you to comment on the unadjusted errors, please. So just before, it felt like we were moving on. So just before we do, can the committee please just conclude on whether they propose to adjust for the errors, and if not, just minute the reason that they aren't?
Shall I give some advice perhaps to the committee? So as in the report, the actual error that was found was for £21,000, and as Paul's explained, that's actually extrapolated. So the actual amount isn't an actual amount. The actual invoice that was incorrect was 21,000. So yes. For us to actually change the accounts would involve a lot of work for very little gain. It's below the threshold, but as Paul says, that we need the audit committee just to approve that I don't actually amend the accounts accordingly.
I agree with that. Okay, can we agree then, ladies and gentlemen? Members of the audit committee, all in favour? Yes. Okay, Alison.
Thank you.
Okay, Paul.
Thank you very much, Chair. I just needed to make sure that was rounded off.
Okay. Right, can we move on? Item 11. Members of the public not to be involved in this particular item.